Hello traders, good morning, good afternoon, good evening. Bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-magdi.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. And it is primarily for the TSTW24 SYS008 and the TSTW SYS008 traders. Okay? This is very, very important. Okay? Today is the 25th of February 2012, and the title of this video is Pure Trading Strategy. Pure Trading Strategy. Okay, using the water line. What is the water line? Okay, and also we will talk about what is the equilibrium line. The water line is also called the equilibrium line. What is the equilibrium line? Talking about MACD, itself, the standard MACD 1226.9, the zero line is also called the water line or the equilibrium line. Okay, very, very important. So, before we start with the topic of a pure trading strategy, we will go through a few things that we have discussed before. Looking at the S&P 500, and also just quickly going through what talking about. Trading on the edge and trading zone very fast before we start the main topic of pure trading strategy. Okay, all right. So the last weekend we were talking about trading on the edge. Here I have Apple stock on the 30-minute chart. Okay, we want to see what has happened the week that has gone now. Okay, talking about trading on the edge on the 30-minute chart here. I draw a trend line. Okay, this point here and this small point here. Allow me to draw this Y trend line on my 30-minute chart on the Apple stock, talking about day trading. Okay, this strategy is valid for day trading and swing trading, position trading, any financial instrument strategy. Okay, so we have our talking about trading on the edge is making an excellent trading decision on the edge of a bullish trend line or on the edge of a bearish trend line, paying attention to the market stable data, the higher time frame command the lower time frame, and using the trading triangle. Whichever strategy you are using, you must incorporate the market stable data. Without them, you will make wrong decisions. It does not matter whether your trading tools are valid or not. Okay. So on this 30-minute chart, we have our point ready. Suppose you didn't draw it here, you draw it from here. This point here and this point allow you to draw it. On the 21st, you see the prior return back on the edge of this bullish trend line. Okay, and here it touched it, and there was it went up a bit, but it was not straightforward. Why? Because the market pattern interfere in this. If I show you what has happened here, paying attention to the price itself, you see the price was oscillating in this zone. You see, in this session was oscillating suddenly. Okay. And here, you will understand why the price dipped down. The price was oscillating between this level here where I'm moving my cursor, and the top one here, and you can see finally a gap up. Okay, so using this strategy, you're trading on the edge. You see on the edge, and here on the edge, this was not a good one because of the market pattern that interfere with. You see here it was going up and down. Okay, and then finally after the consolidation, boom, it gap up down. Okay. Now, another thing I want to mention very fast, you can see that the price gap up here on the 30-minute chart. Okay, this is 15th of February. See here, it gap up here. Traders always, professional traders, do not forget the gap zone. You see the low of this gap here. If I draw a line here, you see the price finally come back again to retest that level. You see, down, it touch it here again, it touch it here before coming up to the top of the consolidation and gap up. Okay, so always pay attention to the section of the gap. Professional traders will always highlight the channel of the gap and also the median line of the gap. Very powerful tool. Okay, all right. So trading on the edge is what what we have seen, you see. So finally, the price did below the bullish trend line and come back and retest it here. Some traders sold it. You see, it went down a bit on the edge again. Now it come back again to touch it again on the edge here. All right, people sold it down again. You see, so trading on the edge, we allow traders to achieve consistent winning trade. Just being patient and understanding the price and applying this strategy with the market patterns. All right. Also, the week before we talked about trading zones. Okay, we know that when a bullish trend line crosses above a bearish trend line, is creating for us a bullish zone. Okay, we will give priority to bullish signal, try to buy at a value support level, within the bullish zone. Okay, on the other hand, when a bearish trend line crosses below a bullish trend line, is creating for us a bearish zone. We will give priority to sell signal, looking for an opportunity to sell, not sell anyhow, looking for an opportunity to sell at a valid resistance level. Attention on the price itself, the number one indicator. Break above it, retest it, turn around, break below it, retest it, and turn around. Okay? Alright? This is what we have talked about. So if you want to know more, about trading zones, here you can go to www.stochasticmarket.com. You click on trading zone here. You will see more videos regarding bearish trading zone. We have some video here talking about zones here at www.stochasticmarket.com. Also, there is a session here for trading edge. It's coming up, trading edge. How one can trade on the edge. You come to www.stochasticmarket.com. You click on trading edge, and you can watch more videos, about this important subject of trading edge. Your trading strategy is your map, your map that will allow you to navigate through this messy market. All right. So www.stochasticmarket.com, trading zone and trading edge. This is about trading edge. We have more videos here if you want to learn to master it and to understand it and to use it, and like professional traders. This is what we have done. We're going to go back now and talk about the S&P 500. A lot of traders are very fanatical about S&P 500. So to satisfy my fellow traders that are watching our videos, we're going to look at the S&P 500. All right. I will quickly go to the weekly chart where we were last week. And moment, please. This is on the weekly chart. My drawings are still here. Now, last time I draw another line, but on this weekly chart, you won't see that red line. There's another red line, which is the level of 1400, But now we are retesting the turquoise line. We are still stuck below the turquoise line, the level around 1370, a resistance level, as you can see here. So nothing has changed. You can go back and watch the previous video to refresh yourself about what we have said about the S&P 500. Nothing has changed. If we break above the turquoise line, our next target is the red horizontal line. But if you receive a signal to sell on the edge here, we will definitely sell it. Paying attention to the price, definitely number one indicator. Talking about the Euro USD currency pair has been bullish above the level of 13200, as you have seen, was going up like a crazy currency pair. And as I told you, a lot of traders love this currency pair very much, and they were buying it. We will see whether they will give us a kind of a pullback. Be very, very careful with the euro. Too much politics, any kind of intervention in the market, either by politicians or by the central bank, is a kind of a legal market manipulation, because the price is due to go in a certain place, but due to certain decision or interference in the market, the market will react in a certain way. It's a kind of force that interfere in the market that will change the course of the divine nature of the market itself. So be very careful talking about the Euro USD. Same thing for our lovely USD card, has performed poorly this week, but the level we are watching is 9929, has not changed, at all. So I have covered what I want to say before we start our topic about the water line. The water line is the zero line of MACD, the standard MACD. In this case, I will use the euro pound currency pair to highlight this a topic of a pure trading strategy. It's coming out, And we will talk about, I have here below, if you look below, the green line here, this is MACD, okay? The orange horizontal line is the zero line. The zero line, also called the equilibrium line, or the water line, the beautiful water line, alright? So this is about a pure trading strategy using the MACD, but attention on the MACD, okay, zero line. We will not talk about the slope of MACD, we will not talk about the signal of MACD, we will concentrate on the zero line, pure trading strategy using the water line, okay, of MACD, the standard MACD 12.26.9. The zero line represents the exponential moving at 26, okay. MACD itself is the exponential moving average 12, okay. So the signal line of MACD, which is the red line here, is the exponential moving average 9 of MACD itself. In fact, it's like the exponential moving average 9 of the exponential moving average 12. The exponential moving average 9 of the exponential moving average 12. Blah, 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 blah. Some traders may disagree, but it's MACD itself, the green line here. And the red line is the MACD signal line. The components of MACD are, okay, the MACD itself, which is the exponential moving average 12, okay, the signal line, which is the exponential moving 9 of MACD itself, and the zero line, which is the water line, and there is another component which we call, okay, the histogram. The histogram, do not have the histogram here. The histogram is the difference between MACD and each signal line. The difference between MACD and each signal line represents the histogram. I do not have on this chart the histogram of MACD. These are the components of MACD. But in this video, talking about pure trading strategy, we will focus on the water line, the equilibrium line, the zero line of MACD, the standard MACD 12.26.9. As I told the traders before, the MACD 12.26.9 is excellent trading tool on the weekly time frame. Okay, now, okay, I don't want to talk about more about this subject, about different settings for MACD for different time frame, but those who are drawing the trend line can make excellent trading decision. Okay, what this strategy is about. Okay, the strategy of the MACD waterline, if MACD is below the waterline, as you can see, the green line goes below the orange line, which means the exponential moving average 12 goes below, okay, the exponential moving average 26. When the exponential moving average 26, when the exponential moving average 12 goes below the exponential moving average 26 on the weekly chart, especially this is designed for the weekly charts, I mean, perform better on the weekly chart, but valid on all time frame though. Alright? When the 12 goes below 26, is creating for us a bearish zone. Alright? It's creating for us a bearish zone. We consider that the market is bearish when MACD goes below the water line. Alright? On the other hand, when MACD 12.26.9 goes above, okay, the water line or the equilibrium line, is creating for us a bullish zone. When MACD is above the water line, we will give priority to bullish signal. This video is the continuation of the video that we titled Trading Zones, and this time we are using MACD, okay, standard MACD 12.26.9. As I explained to traders before, the TSTW trading tools, okay, do not use the MACD. We do not use MACD. The only tool that we use that incorporate MACD is the TS MACD Pro at www.dayprotrader.com. Now, so MACD above the zero line is creating for us a bullish zone. MACD below the waterline is creating for us a bearish zone. Okay, so how do we trade it? Talking about making decision. When we are trading, use this simple, powerful tool, MACD, moving average conversion, a divergent tool. Okay, you see here. So it's bearish, yes, below the zero line. So we know that, okay, we are in a bearish zone according to MACD. Okay, so how do we trade it? Okay, how do we trade it? Now, before we continue with this subject, the yellow line I have this chart. This is the smart media line for MACD. If you do not know about smart media line, go to www.articlebase.com. Check the article trading. Okay, 6 critical price level. Okay, trading 6 critical price level is about MACD. Okay, all right. So it's about the smart media line. The smart media line for the euro pound. Okay, the euro pound is at 8573. 8573. Okay, right here. So how do we trade MACD below the zero line? We want to draw all line. You remember the strategy for trading zone, the same rule we apply for MACD. We draw all the key level. I'm going to change my time frame. Instead of using a weekly chart to demonstrate this strategy, I will use the 3 days chart, 1, 2, 3, 3 days chart to demonstrate the MACD below the zero line and MACD above the zero line. Okay, to traders here. Okay, so we are now on the 3 days chart, 1 to 3 days chart for MACD, and here you can see on this 3 day chart, MACD is below the orange line here. All right, so we will start drawing lines. Okay, the key level. When we are talking about key level, these are important level. Okay, right here. There's one here. Okay, there's another one here. Important levels. When we are talking about key level, we are talking about important price level. We draw all these lines ready on our chart. As I've told you before, your strategy is your map. Okay. Alright, you want to map it, you want to know where we are going so that you can navigate through this messy market excellently. Okay, this is another one. See how the price did touch it this week. Okay, you want to see it. Okay, it's an important line how the price went this week. Boom. Okay, alright, key levels. Now, so MACD below the zero line, there is a question asked by the TSTWSY S008 trader that I will answer at the end of this topic. Okay, I will answer your question, yes, about drawing trend line. I will quickly go through that at the end of this video. Okay, so now, so we draw all our key level, MACD below the zero line, which means MACD create for us a bearish zone going below the waterline. We have all our key levels. So MACD was below the zero line since this level here where we are, where I'm moving my cursor now. That's the time here, you see. That's where MACD went below the zero line. So the strategy is that we want to give priority to sell signals, so price break below, okay, a key levels, okay, here, alright. MACD here, cross it below the zero line at this point in time, okay. We want to look for an opportunity to sell, but we want to sell at a key level, at a resistance level. You can see that the price went down first, okay, come back, okay, retested this resistance level here, top. At this point in time, we'll look for an opportunity to sell. If you receive a clear-cut signal to sell here, can you see? Okay, bring it back again. We are talking about here, okay, bring it back here. Okay, at this point in time, we'll look for an opportunity to sell. If we receive an opportunity to sell, we will sell. Because MACD is below the zero line, the price dip below a key level, come back and retest the resistance level, we will take it. Alright? Again, those who draw their trend line will make better trading decisions instead of trading MACD. Alright? Again, MACD, price went down, again, price come back up again, you see, retesting this second horizontal line, here, after going above, come back down, is here. On the edge, we want to look for an opportunity to sell. It went down. Price returned back above to retest the top resistance level. MACD is still below the zero line. We are watching the price self, understanding that if the price is truly bearish, it must continue to display lower lows and lower highs. But if it starts displaying a higher low, we know that the music, though the MACD is still below the zero line, the music has changed. Alright? Alright? So we sell down. We want to see lower lows, lower high. If it's truly bearish, alright? If it's not giving us lower low, lower highs, though MACD is below the zero line, which means we are in a bearish zone, but the price starts displaying higher low, we will pay attention carefully. We do not just sell like mad traders, so to speak. No one is out buying or selling anyhow, but we will always trade the price itself, the number one indicators. Okay, so price we see went down, come back, it retests another resistance level. MACD is below the zero line. We are in a bearish zone below the water line or the equilibrium line. We will look for an opportunity to sell here. Opportunity to sell, we wait for signal, value signal given, we will sell. First target, the first and nearest support level without discounting any support level. These strategies valid on every time frame, but the higher time frame strategy are solid. Price dip down, boom, you see, went down big time, seeking a better support level. the small median line is the yellow one here. Touch it here. Bullish candle follow that. After touching the small median line, it's not surprising. Boom, price went up to retest again this key level, another resistance level. From the small median line, we went very fast to retest this level. We will look for an opportunity to sell. Mark this below the zero line. The price still bearish. Okay, still bearish. A high, a lower high, a low, a lower low. So it's still bearish, not very bearish, but it's still bearish. We'll still look for an opportunity to sell. We will sell. Boom. Price went down. This time price turn around, display a kind of higher low. We want to be very, very careful. We want to be very, very careful. This time you want to sell, you are very, very careful, because you know that the music has changed a bit here. But here, if you start coming down, your first target is this one. It crashed through it. Wow, that's gorgeous. Normally the price give a higher low, should continue, but it was rejected here. You know that the bear are very, very aggressive. They push it back down. Price went down. Price come back again, retest this key level. We will look again for an opportunity to sell. And price roll it down. All right. So mark G below the waterline is creating for us a bearish zone. We will pay attention to the price itself, the number one indicator. The definition of the uptrend and downtrend, especially the downtrend in this case, lower lows, lower highs in a downtrend. If the music has changed, we are very careful. So the key levels allow us to locate the hotspot trading zone where we will make excellent trading decisions. I want to show you now for Mark G above the waterline, again on a 3-day chart of this Euro GBP currency pair, this session here where Mark G was above the zero line, where I'm rotating my cursor. You can see that Mark G was above the zero line. Price ran very, very fast, non-stop. People just push it, push it, push it, push it, push it, push it. Very often, when the price is running like this non-stop, you know that the price is looking for a specific resistance level, or a specific support level, or a specific a key level. Sometimes you will see the price will run fast without any pullback. Very often, the price is looking for a specific price level. Here, boom, it touch it, it come back down. Sometimes you will see that. When you see the price running non-stop, very often the price is looking for a specific price level. You want to define the key level that the price is looking for and be ready also to participate in the change of the direction of the price. Okay? So price run very fast, very fast, very fast, very fast, very fast, looking for a key level, crash it down. But Mark G, as you can see here, Mark G was above the zero line in a bullish zone. So we want to know the key level. We draw all our key levels, including the trend lines. Okay? Trading on the edge. Okay? So this point here and this point here allow me to draw this trend line. So I'm ready. Okay, my Mark G is above the waterline. Price come near the edge. I want to look for an opportunity to buy. I'm on the 3-day chart. I will use another entry time frame and check the higher time frame, because this is my signal time frame. I will not enter the trade on this time frame. This is my signal time frame. All right, always 3 time frame. Price again pull back on the edge. Mark this above the zero line. We are in a bullish zone. I want to buy on the edge here. Or if I receive a signal to buy, in fact the price couldn't touch the edge because there is another level here. So those who are drawing the line will always make a better decision. Here, you break above it and retest it here. Price continue movement to the upside. Come near the edge again, not very near. Price was seeking this level, not very good place. Boom, it went up, come back again on the edge, you see on the edge, and finally we have reached the level there. Mark G above the zero line, priority bullish signal. Buying on the edge of a bullish trend line or at a valid support level. Price breaking above its resistance level as it did the previous high. Price going up, price display higher lows and higher lows and higher highs. The previous high is the key level. Break above it, retest it. Okay, break above it, retest it, turn around, break above it, retest it, signal to buy, break above it, retest it, valid signal to buy. Attention on the first and nearer resistance level. Okay, all right. So this is just a quick video, okay, regarding a pure trading strategy using the Mark G, the waterline. Mark G going below the exponential moving at 26, which is the zero line or the water line or the equilibrium line. We must give priority to bearish signal. MACD crossing above, okay, the waterline, we must give priority to bullish signal. Sometimes you will see sometimes where the price will MACD here, as you can see, it crosses above the zero line only to return back below it. Because what usually takes place, the price went above it, you see here. So at this point in time, you will draw this point, and this point will allow you to draw it. As the price going up, sometimes I told you, sometimes the MACD will come out only to come back down, because the market, for a new trend to begin, the trend must have a strong foundation. Sometimes the MACD will come above it only to see the price quickly reach a resistance level. So MACD will come above the zero line quickly. The price is at a resistance level. So do you just buy? No. The best way to buy is for this resistance level to be broken. As you can see, MACD crosses above the zero line. The major resistance that we have on our left hand side, looking on the left hand side, was not broken. So it's not serious. Alright? It's not serious. Okay? On the other hand, MACD break below the zero line. Again, looking on the left hand side, the support level that we have on our left hand side must be broken. Broken, retested, and the price rejected. Okay? Alright? Now, I do not want to go too much into this subject of waterline. I believe that we have said enough that a trader can use in their trading decision to make a better trading decision. But before we close this video, I will say something very important. A lot of traders watch video on YouTube and they will go and use it in the void, which means traders are showing different strategy, but the strategies are only valid when it's used together with the market stable data, the higher time frame, and also the area wave theory and the trading triangles. These are very important. Any strategy that you are using, you must use them together with the trading triangle, the market stable data, before the market patterns, before you can achieve consistent winning trade. Alright, it makes sense. Now there is a question asked by a TSTW S008 trader. I will remove my drawing and I will answer that question very fast. It's about how I draw my trend line and how traders draw the trend line. Now the first thing I should say to traders is that do not try to follow my trading style. Very important. Every trader is different. Very important. But the question was an excellent question. It was about drawing trend line. Now a bearish trend line, we will draw it by joining one high and one lower high. That's how traders draw a bearish trend line. A high and a lower high. Simple. That's how you draw a trend line for a bearish trend line. For a bullish trend line, the traders will join a low and a higher low. That's how they draw it. A low and a higher low. That's how you draw a bullish trend line. But I have something, what I will say to you, couriers, in this case, that to draw a trend line, you must join two important price levels. That will make more sense. Doesn't matter any important price level. We are on the 3D chart. The hotspot trading zone, I can join any points, two important points together. That's it. So to draw a valid trend line, one must join two important price level. Full stop. So if you keep doing that, you draw your trend line correctly. I can join this one. So I want to tell you what I'm doing now. I join this one, with this one. You see what has happened? This one and this one. So the important price levels are happening on a higher time frame, but it's valid on all time frame, but it's solid, on the higher time frame. So this is how you draw a trend line. Join the important price level. Wherever the price changes direction, these are important price level. That's how you join them. I can keep drawing lines wherever I feel like. It doesn't matter. As I said to you, try to develop your own trading style. Very important. That will allow you, to make better trading decisions. But to draw the trend line, important price level, a bullish trend line, a low and a higher low. It doesn't matter where is the important price level. I can join any important price level. I can join this one here and this one here. So I'm starting from here and I'm joining this one and this one here. The key element to remember is that it must be a very important price level. Important price level, a level where the price changes direction, especially on a higher time frame. you'll be amazed how the price respect those important price levels. Apart from the trend line, the horizontal trend line, this was more about the horizontal trend line. This is what QDS was talking about, the horizontal trend line. Again, the same thing. One important price level with another important price level. Now, there was a very interesting question again, was about the candle, the low of the candle. Some traders will go and draw the trend line very carefully at the bottom of the candle. This is about their trading style. It does not mean that that's the best way to do it, but it depends what they want to do. They are behaving like Lavoisier, who are interested about accuracy. I'm not that type of trader, to be honest. I talk more about trading zone instead of price level, precise level, because the price does not stop on the on one particular level. It will go down, it will go up. So some traders will go at the bottom of the candle, some will go on the opening price level. Blah 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 blah. I'm not interested. So it does not matter, okay, Kulia, it does not matter. So whether you draw it from the bottom of the candle, like here, you see, I couldn't even do it properly. So because it doesn't suit my style, so people will draw it on the bottom of the candle. It does not matter. What you need to remember is that the important zones, you want to join the important zone and watch the zone, okay? So that's it. That's all I can say about drawing the trend line and the candle. So this is it. I don't know nothing I will say before I close this video. If you want to know more about the trend line, okay, not only about this particular trader, other traders who are interested, go to YouTube library, okay? Go to www.youtube.com, put in trend line, you will see other video posted by my fellow traders. We'll explain to you other things that I did not talk about here, and that will allow you, okay, to develop your own, okay, trading style. But whichever trading strategy you are using, you must incorporate, okay, the higher time frame, very important, and the trading triangle, okay, very, very important, okay. Now, before we close this video, okay, we want to show you one, okay, article very fast. If you want to know more about MACD, this is about going to www.goarticle.com, goarticle.com, goarticles.com, and the article I want you to pay attention to is called, the title is called 2 Steps to Achieve Consistent Winning Trade. 2 Steps to Achieve Consistent Winning Trade by George Beaulieu. That's myself, okay. And you can see here I talk about MACD, okay. I explain another different strategy for MACD apart from the waterline. I just talk about a different strategy for MACD using the standard MACD 12.26.9. How you can use the MACD 12.26.9 to achieve, okay, 2 steps, okay, to achieve consistent winning trade. The article is at goarticles.com. You can look for it. The title is 2 Steps to Achieve a Consistent Winning Trade. As you can see, ladies and gentlemen, it does not matter which trading strategy that you are using. You must always incorporate that with the trading triangle and the market stability. This video is about the waterline and the pure trading strategy. Thank you for watching, and we will speak to you very soon. We are the TST 24 traders.